The information and opinions expressed in this video are of a general nature and are not intended to be investment advice, research, or recommendations. Please consult your investment professional for your own circumstances. The information in this video reflects the opinions of Arca Labs and the video's participants on the date of production and are subject to change at any time without notice due to various factors. Arca Labs is separate and unaffiliated from any third parties participating in the video presentation, and Arca Labs is not responsible for any third parties' products, services, or policies.
Welcome to Tokenization Talks, powered by Arca Labs. I'm Annelise Osborne. At Arca Labs, we're focused on innovating responsibly. We are excited to bring you institutional thought leaders in the digital asset space. Today, we have a bit of a different format with Anthony Bufinsky, who's the head of growth here at Arca Labs. He and I are going to share our predictions for 2023. So Anthony, welcome. Thanks so much for joining.
Thanks so much, Annelise. Really appreciate being here.
So I would love it if you would share a little bit about yourself, and then I will share a little bit about myself because I guess we're technically interviewing each other.
We are. So once again, Anthony Bufinsky, I'm head of growth here at Arca Labs. I've been here with Arca for almost 2 years now. Previously, I was at Consensus, where I was managing director and running the digital asset broker dealer. Prior to that, I have about 20 years of investment banking, capital markets experience. I worked at HSBC as well as a managing director at Guggenheim Partners.
Great. Annelise Osborne, as I said, I started my career in commercial real estate and commercial real estate finance, and I spent the bulk of my career at Moody's running rating teams and assessing risk within structured finance. And I got into digital assets in 2018 when I was asked to join a regulatory task force focused on ICOs. And for me, I recognized the benefit of blockchain and how it could help upgrade finance and how it's transformational, I believe. And then I met a partner and we launched digital assets through a broker dealer in 2018, which was Propeller and Fluidity. And then fast forward earlier this year, I joined Arca. And I'm very excited to help build digital assets in traditional finance and partner with institutions to do that. So that is where we are starting. And let's start with 2022. So Anthony, how would you sum up 2022 and what did we learn?
Yeah, sure. Well, it's obviously been a lot of headwinds. 2022, I'd say more of a defining year for digital assets and blockchain. I see governments kind of move from a watch and wait position in regards to delivering, regulatory framework and kind of a commentary on that. Still taking kind of strides to, look at the potential of the technology. So still a positive growth, but obviously still a lot of concerns in regards to safeguards of investor protections and assets. So as we end the year in a lot of volatility and a lot of headwind space, I still believe, like I said, we've seen great strides in 2022 as we head forward into 2023.
So I and Anthony and I did not share answers on these, so we might have similar answers or different answers. We just kind of sat and thought about it. So I would look at it. I think that this year has kind of highlighted that despite the glory of the younger and tremendous success of younger players, financial players in the space, I think the importance of traditional structures and experience, which includes like gray hair and market cycles, I think that is more paramount than before. And I think this year has highlighted that. But I do recognize true innovation started with really kind of a younger generationist looking at crypto and understanding the change in finance and payments. So I think that's recognized. But the way that I look at kind of this year sums up is that, before crypto and blockchain was more hoodie oriented, and now we're focused on suits. So I'm stealing that from a panelistic consensus, but that's kind of where I see us going. And I think it's really kind of more of an understanding of regulation, risk, and experience.
Sure, absolutely. So let's get into predictions, right? from your side, Annelise, what do you predict, for 2023? Give me at least a couple in regards to where kind of the market's going to go as we see forward and what you're seeing in the marketplace right now.
Okay, so I highlighted 3 that I think we'll see next year. So one, I do think we'll see institutional grade custody solutions. So I think that's one thing that's really holding institutions back is the concerns of custody. I do think also it's hard for institutions who have been around for hundreds of years or 800 years or even shorter than that, right? To give the financial responsibility and then being a fiduciary to a new startup company. So I think we are going to see institutions that start building custody solutions for their clients that have their names attached to them. And I think that is going to help build comfort and trust from the institutional side. So I think that's one that I anticipate we'll see next year in 2023. I know a lot of people are working on it. I also think we will see more traditional finance innovators, let's call them. And so innovators in the sense that kind of first movers. So I think this year we saw KKR, Apollo, and Hamilton Lane, all big names, step up to privatize funds. I think we'll see more similar asset managers and more people in the private space come into tokenization. And I think those innovators are helping create the rails that will help build standards. And it'll also help us work out, some of the kinks. And along those lines, I think what's really helpful there is my number 3, that there'll be more regulatory clarity. One, what we're looking for, that's not going to be solved, I don't think. And if we think about regulators, they're generally reactive than proactive. But what we need to do to work with both regulators and lawmakers is education, but also build on existing laws and existing regulation. So I think we can create traditional finance securities on top of existing regulation and work through with regulators in real case scenarios as opposed to hypotheticals. And I think that will help build the industry. So those are my 3. So it's custody, more traditional finance, and then more regulatory clarity.
Excellent. Well, you definitely took one of mine in regards to institutional custody and safeguards in that respect. So I'll kind of pivot. I kind of look at it where, and I'll look at Bitcoin as either a currency or a digital asset, right? I ultimately think, with the Fed Reserve signaling, let's say, lower interest rate hikes, and that's going to obviously slow the pace of those hikes. It's typically a bullish sign for riskier assets such as the Bitcoin. Ultimately, I think that'll lead the way. Why? It's the oldest, most valuable currency. I think it's about a $340 billion market cap, give or take today. Obviously, it fluctuates quite a bit. And typically, it's the first asset exposure in the digital asset side that, investor will kind of take part in, right? So, a lot of capital has outflowed this year out of all assets, both, from book entry assets, digital assets across the board, alternatives, et cetera. So I think a lot's waiting on the sideline, and that will return. And ultimately, I think Bitcoin is the easiest one to purchase and has the most kind of transparency out there and acceptability. I think that will be, it'll touch some lows, but I think we'll start to hit some higher highs, right, from where we've been. But there will be a floor put in 2023, and then, like I said, we'll escalate from there. So that's prediction 1. 2, I think Latin America as a jurisdiction, bar none, will be kind of the centerpiece for 2023. I just came back from that region, from a tour with institutional, entities, banks, investors, et cetera. It's a really young population, high inflation right now, but the regulators were very, let's say, open and fungible in regards to legal adoption and creating real framework, right? Which is necessary to have these types of assets, be deployed and marketed and accepted at the local level. And also, I believe Latin America will do some of the first investment grade, maybe sovereign, tokenized bond issuances, and also for private debt, right? ESG related. That was a very strong, let's say, soundboard and soundbite from my takeaway from the region. So I think Latin America as a whole is going to have tremendous strides, at the institutional and retail level. I also think, companies are going to look to the blockchain in regards to trackability, traceability, and possibly tradability into the rich kind of data that is kind of accessed by blockchain as a whole, right? That becomes very valuable. So from a data perspective, I think that's going to be, a big push, and we'll see more companies providing infrastructure that can monetize that data for issuers and companies alike, right, that are aligned in this kind of ecosystem. So ultimately, that's my kind of 3 takeaways. Bitcoin, Latin America for geographics, and infrastructure, right? Technology infrastructure is really important. That's where I think 2023 will lead us.
Can I ask about Latin America? So where do you see their growth coming from of all the different ways to implement blockchain? Where do you see that happening?
Yeah, great question. From an exchange-related perspective, it's not like an exchange we have here in the U.S., right? We have a DTC. Europe has Euroclear, Clearstream. So it's very bifurcated in regards to country specifics. So to create, interoperability amongst countries to attract foreign direct investment at the localized level, I think is really important. That is going to increase economic development within the region. That's in the ethos of a lot of banks within the region and government, right? From hearing just, like I said, and talking with regulators on my previous trip, that really is kind of a necessary means to get more viability for different countries to interact, trade, commerce, etc. It's building the rails, as you said, right? And when that legal framework and adoption's in place, I think that becomes very compelling. So ultimately, I think there's an alignment of countries there that have the same mindset to go ahead and meet their KPIs, GDP and subsector GDP, KPIs at the local level and topco level, the stakeholders. So ultimately, that's kind of driving adoption. Yeah.
Okay, great. Okay, I'm going to fire away to you as well. Where do you see opportunities and challenges for 2023? Like where we are today, how are we going to grow and what's kind of holding us back?
Absolutely. RWAs, right? Real world assets. That is going to be that's the discussion topic 2023 as we go forward. So, kind of a movement and a pivot from, let's say, tokens out in the marketplace to actually assets that are tokenized, ultimately, that you can do a real, DCF calculation on, understand there's real bankruptcy, recourse back to assets. There's tangibility there. That to me is kind of be the 2023 kind of narrative, right? As we go out to more, and we're going to see more of, from let's say curated project loans, receivables financing, things of that nature. That's where we're going to see more of an appetite for investors to come in and accept the digital asset in this form, right? In this wrapper, but ultimately still have kind of the traditional asset as the asset base, right? And that they can kind of bookmark in their portfolio. So to me, real world assets are 2023. Headwinds though, and challenges ahead for sure. Legal and regulatory framework adoption, and that's going to be demographically specific, right? In some areas of the world, Latin America, I think there's a little more progressive approach. U.S. is obviously always the tried and true, most battle-tested jurisdiction, but ultimately not the easiest one, moves the slowest, as opposed to other counterparts, within the world. So I think from a legal adoption, regulatory, framework, and adoption amongst regulators to accept these types of structures, that's going to be a mountain to climb, as it has been, and obviously will probably continue into 2023. And yourself?
Great. Okay, so mine is similar. For opportunities, I was really looking at private markets and debt. So private markets really is real world assets similarly. I think we're going to see a lot more in the private fund space for tokenization of funds. And I believe we'll see more in the debt space as well. So I think we're looking to kind of solving friction and risk and finding markets that have less liquidity with the idea of perceived and potential liquidity that can come with tokenization. I also think it's a down market right now, and the opportunities to work in innovation in a down market. It allows us to work both on use cases and pilots that get us ready kind of for the bull market ahead when adoption picks up. So I think this will be a big year for picking up on it. I think adoption will grow significantly from a traditional perspective than we were previously. But I don't think we're at the tipping point quite yet. And sure. Then from a challenges perspective, I do think one is figuring out the best use cases and recognizing that blockchain doesn't solve all problems. And then really what I think is building up interoperability, which is something you touched on as well, right? Custody, security, connectivity between counterparties, getting institutions educated, connected, comfortable, which again comes down to regulation as well. So I think there are headwinds, but I think we can come up with different case by case in building out traditional finance in the regulated format in the digital world. So I really do think that that we can move all that ahead. So
sure. And in regards to, let's say, from a fund perspective and being specific, do you see it more of a, an efficiency in the operations? Is there an arbitrage in regards to secondary trading and liquidity, right? Where you can, have an arbitrage kind of opportunity where you did not have before, let's say, in a more of a book entry or just a paper to like OTC type transaction, or do you see a hybrid, right? You tell me.
I think different people have different focuses. What I'm finding now from the asset managers is the whole world out there, the population of who's holding the money is shifting. And I think as we look at the upcoming millennials and the whole idea of right now with private funds, generally it's only institutions are investing in private funds, is that we can tokenize and open it up to more people. So I know that some of the first cases have gone out still with qualified buyers, but I think we can the push is to open up private equity, for example, to more retail investors. And I think that, which also touches on the potential for liquidity, I think that's the biggest thought in people's head right now. It's just a matter of getting there. And I also think the idea of the perceived liquidity, I think the primary market is difficult. I think the primary market's difficult because we're starting and it's new, and we have custody issues as well. And I think education, I think once we show there's a secondary market, that the primary market will significantly grow, right? When people know that there's an opportunity, that said, a lot of private market investments aren't actually traded. And so are they not traded because I want to put my money in and just sit there, or it's because I can't? So I don't think that everything that we create or tokenize is necessarily going to be traded on a frequent basis. But I do think it gives that opportunity. It's like a call option, right? It's just an option to actually, you're paying for that option with tokenization. So I do think, so I'm a big believer in efficiency, especially on the debt side. I think there's a lot, but I think from a private equity and a private fund side, and the private fund could be tokenizing an SPE as well, right? An investment structure that owns an investment, which is a real world asset. So it doesn't have to be a private equity fund. I think there's different private structures, so it could be that also. From a debt, I think it is both technically investing in fractionalization, but I think also there's a lot of efficiencies. If you had smart securities and you have debt, which is fixed income, which can be programmed onto the tokens, I think you could build out servicing as well. So I think there's a lot from the efficiency side from debt, and then kind of from the private market side, I think there's a lot of reaching more people. So I think those are kind of the way that I see the top. I think there's a lot of benefits that blockchain brings, but those are kind of the main drivers, as I see.
Yeah.
What about you? What do you think?
I think from your two things. One, your call option analogy, I think is really kind of paramount in regards to bringing another level for let's say participation as well as price discovery. To have that kind of luxury, right? Where previously you just did in a private equity fund. I think that's really compelling right now. Obviously, brings some liquidity component, and liquidity is everything in kind of compression moments. And I believe, from the efficiency side, let's say from an issuer services perspective, right? To effectively manage these assets and, pay dividends, coupons, et cetera, in a timely manner, more efficient manner. That to me is still, obviously a compelling, kind of aspect about it. So the culmination of both, I think, is a hybrid model, right? Which ultimately gets people compelled to kind of think otherwise as opposed to traditional kind of ways of settlement. That to me is a kind of a game changer and a driver here. And we're going to see that more. There's tons of OTC type traded transactions, obviously, that are, off exchange, et cetera. So to bring that kind of structure and wrapper to those marketplaces, then provide participants access. I think we're going to open markets ultimately and drive greater adoption in 2023. So I'm going to look for more of these private debt structures, real world assets that were typically in kind of geographic locations where issuers just did not have access because they weren't participating on certain exchanges, such as like a DTC or Euroclear. Let's say they're Latin American based, don't have the accessibility or let's say even the capability and cost perspective, right, to access those types of markets because it's expensive. Underwriters are involved, placement agents, third-party administrators. if we can kind of condense that model into a more decentralized investment banking type service level out to the marketplace, I think that's a really ingenious idea. And I think the adoption in these more kind of emerging markets for curated project loans, as an example, non-rated but have an equity component to it in regards to the equity piece from a rated entity. I think that's really compelling because it brings kind of a shadow credit rating to an issuance, and be able to have access to that, right? Where typically I couldn't have access, with my only access is through an ETF or a mutual fund, right? And those positions continually change. I have no voting power or authority or discretion in regards to how that actually money is invested, other than a prospectus which outlines kind of a big homogeneous soup of potential, right? In this case, you'd be specified in regards to where your investments are going to go, especially important for ESG type family offices, MFOs, etc. That have different KPIs and stakeholders that they have to report to have that specified investment allocation into a project that provides economic development or carbon offset, so there's no greenwashing, things of that nature. I think that's where kind of this market's going. So it just gives greater flexibility overall, and better accessibility overall to investors. So I think 2023 is going to be a good year ultimately.
Yeah, no, I agree. I want to add one thing is also paper heavy markets, right? The friction, a lot of what we're talking about are antiquated systems is wrong. They move technically efficiency in their own way, like repo, for example, right? Or some of these bonds or private debt, right? I think a lot of times there's a lot of paper heavy that can be made more efficient. So super exciting. So we're very excited. This is our last episode for 2022. So thank you guys all for joining, and we look forward to a very prosperous 2023.
Thanks so much, Annelise. Thanks for having me.
Thanks. Take care.